Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Welcome on this Wednesday. There's the bell. And speaking of the bell, let's go ahead and get started. In this class, Trading Growth and Value Stocks. We'll talk about that here today. We'll probably talk a little bit more about growth stocks because that's kind of where some more of the moves are right now. And I want to go ahead and hop right in and just get right to your questions and some of the resources that we have and examples. So we will hop right in. Now, remember that the information we provide here today and always is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. It's a part of it, but it's not all of it. Okay, so we want to have a class like today, fundamental analysis, where we kind of talk about the businesses underlying the charts. Okay, and also realize that there's other things outside what is happening on the chart as well that we want to be made aware of. Also, we will do our sample trades in the paper money software application. Occasionally, you'll see me post on X, and it looks different. That's because I'm using the iPad Pro, if you will, Apple iPad Pro, and I'm just using the Thinkorswim Mobile. Okay, so if you see that on my X, it's the Thinkorswim Mobile that you're seeing. Now, also remember that when we talk about examples, investing involves risk, including loss of principal. Past performance is no guarantee of future results. Now, today, what I want to do is just take a very quick look, 5 minutes or less, on markets and sectors. Okay, just briefly. I want to kind of get an idea of where some of the areas are that we could look. Second, I really want to kind of get into a section of the value sample plan that is in the online course right on schwab.com. Now, I think a lot of times when you kind of think about learning anything, you're thinking, I want to get more confidence. I want to be kind of have more confidence in trading what I see or investing what I see. I want to go back to the plan here today and focus on a section of it. Let me show you just real quick where that is and just make sure we're all on the same page here. And so if you go to schwab.com, okay, and by the way, this doesn't matter if you're a beginner, if you're intermediate or advanced. If you're advanced, you're always honing your plan. You're always thinking about what I might consider or change. Might not be doing the heavy lifting, but you're always looking at it. Now, when we go on to schwab.com, when we go to where it says learn, you're going to see up at the very top, it will say then courses. Of course, you want to be logged in. Once we log in, we'll go to the learn tab, then go courses. Now, when we click on the courses, what you're now going to notice is it's going to give us some set courses. Now, by the way, these topics are really important, okay? Simple steps for retirement portfolio. Do you want to retire? Are you retired? You want to feel more confident about your retirement? That'd be a really good thing to actually go through. Now, the second one pertinent to this class is really stock investing with fundamental analysis. Now, by the way, does it only have to be stock investing? No. Okay, it could be something more along the lines of derivatives if you consider that. But we're going to call it stock investing with fundamental analysis. Now, if I click on that right there, you're now going to see that there's sample lessons here, and I'll maximize this so we can see it. And you're going to see that if we scroll down, introducing fundamental analysis, principles of value investing, estimating intrinsic value, and sample fundamental value plan. Now, if I scroll down even below that, okay, principles of growth investing, and down here at the very bottom, it will say stock investing fundamental analysis and the intrinsic value calculator. This resources is just below the lessons in the fundamental course, okay? Now, if I click on this, let's say that link right there, it's going to take us to here. Now, there's a section that I want to focus on today. Why? Because we can. And why? Well, because it's in the sample plan. Now, if I go to this, and this is a very important point to bring up, this is a sample plan. It doesn't mean it's your plan per se. You might take away some things or add some things. One of the first homework assignments I'm going to give here today is print this bad boy out, okay? And think about maybe how you would like to invest and or trade. Now, the section I want to go down to, if you look at this, okay, I'm going to go down to, so page 3, there it is. I'm going to go down to this section, and the area that we're going to focus on is this area right here. And one of the points it talks about is looking for like a moving average crossover, okay? A breakout in a basing pattern, and even just like a price closes above the simple day moving average. I want to kind of add something to that where we could just kind of say we're looking for a moving average cross in general. Now, that's not to say that we're not looking at the fundamentals. We are. We're going to. And we're going to reflect back to some of these metrics or criteria that we actually see up top. So let's dig in. So first thing is, if you don't have this, print it out, save it, and then actually be working on it and think to yourself, how do I like to invest? If I was going to maybe do a speaking engagement, okay, going to have a couple friends over and explain it to them, how would I explain it to them and involve them? That's very important. A lot of times when you teach something, you learn something back. Very important you do this. If you miss this step, you kind of miss the whole point. Now, let's kind of bring up just real quick. Last week we talked about not looking just at daily charts. We talked about weekly charts, okay? And if you look at the NDX, we'll do this quick, you're going to notice that when we take a look at the NDX, kind of being a little patient here, which has kind of proved to be maybe beneficial. We've kind of been making that ascending triangle. Now, I do want to point out the oscillator of the MACD. Sometimes when you get the prices to pull back or consolidate, you really see like a MACD where it's kind of what I call diverging. Let me explain this on the bottom first. So the red bars are, it's meaning it's below zero and each day is worse than the previous. Why are there burgundy bars? Well, the burgundy bars are actually, it's below the zero, but it's better than it was yesterday. What is better? The momentum is better. Well, if I zoomed in again, what you're going to notice here on the weekly, and I'll maximize this, how far did it go down? Well, it went down to about right there. That was the deepest point right there. What did you notice lately on the weekly chart? Okay, well, that was not as low as the previous. So whenever you kind of see like a little divergence like that, which you're going to see more of these today, and then you finally tick back up on the MACD, that momentum was building and then now starting to press. If we take a look at where the NASDAQ is here today, we had a crossover, okay? Now let's kind of just say this right now. What type of crossover do you like to look for? Okay, well, in our examples, we're going to use, and I'm going to kind of start with how I started, okay? We would use, in our example given, a 10-day EMA, exponential moving average. And then we would also, for example, sorry about the A, and we would also use like a 30-day SMA. Does anybody know why there's a differences in the types of moving averages? Well, just simply put, the SMA is like an arithmetic average, okay? The EMA is weighted to the more recent days. It's going to be more sensitive to the recent price action. The purpose of the 30-day moving average is to identify trend, and the purpose of the 10-day moving average is to identify momentum. So that is why there's differences in also the duration of time. 30 days, okay, and then 10 days. So this would be probably the number one way we could actually identify crossovers, which we could also script it. In our example also for today, we're going to use the 10-20 crossover, or I'm also going to include 30, okay? Now, the hybrid, okay, the EMA is the whole moving average. Now, some of you have asked about this, so I'm addressing it, okay? You're welcome, okay? I can't believe I have to talk about the whole moving average, okay? I'm joking. So the whole moving average, same idea here, the 10HMA, the whole moving average, it's really just the same idea as a weighted moving average. It's even more sensitive than the exponential moving average. We'll be looking at the 20. We'll also show the difference there, the 30. Why are we bringing this up? Well, we bring up things that are relevant to what's happening to the current market. What's happening in the current market? Well, now people are talking about tariffs and tariffs and tariffs, and it distracts them to kind of what's happening on the chart. What we see on the chart is a moving average crossover in the midst of tariffs, okay? And a lot of times we can get moves when people are distracted. Now, if you take a look at that on the daily chart, you go back to the moving average. we've been in a crossover situation on the NASDAQ since February 6th, since we've been talking about tariffs. Feels like forever, right? So in the midst of the tariffs, whatever people want to talk about, nevertheless, the NASDAQ said, hey, you can talk about tariffs all you want. I'm just going to go up to the upside, and you can keep talking about tariffs. So I'm having a little fun with you. Yeah. With all of us. Now, so the NASDAQ, which had been the leader, has led. Now, the also point we want to bring up when you look at the SPX, if you look at this, and by the way, congratulations to everyone out there riding the trend. That is actually, if we close here, which we just did, okay, the SPX being the cash index, that's the highest close we've had, 61.47. Okay, now that's pretty nice. And when you take a look at this, we can even say, well, James, that's kind of like a potential bull flag. There's the pull, and you could kind of say that maybe there was even a symmetrical triangle. I mean, you can even draw that too, okay? It's probably going to be a little bit of each. I think if we kind of had to say what was it, probably like a symmetrical triangle. There's the break. People talk about tariffs. And then what you're going to notice is a little push and a little hammer time. Makes me want to go get the hammer out in the garage. Now, little hammer time up near the high. Now you might say, well, that's a hanging man. Well, not if you're bouncing off support, okay? Left a long lower shadow near the 10-period moving average, which is the momentum moving average line. Doink, okay? Now, remember, a new high is not a bad thing. A new high is a confirmation of an uptrend, okay? If you make a high, highest likelihood is a higher low. Now, quick question that came on watch list, okay? Now, I'm not talking about futures. I'm just answering a question, okay? So I like to label. So I like to think in 1, 2, 3, 4, okay? So when some investors wake up in the morning, they might look at futures. Doesn't mean you have to, but let's say the paper money account does. We have a list of futures, okay? 2, I have a list of indexes. Why do you put the indexes second? Well, I put the indexes second because if I wake up at 5 o'clock in the morning, which I typically do, the market's not open. It doesn't matter what the index is because it's not open. So that's why some people look at the futures. They might not trade futures, but they're just seeing if the market were to open, where would it be? And there's some other reasons there too. Sectors would be number 3. And then if you like to look at, let's say, some currencies, number 4, okay? Now, the other list that we have would be like the Dow 30, okay? S&P 100 broken down into 2 lists, so we can script it. The NASDAQ 100 broken down into 2, so we can script it. And I've shared those lists before. The other list that Kevin Horner and I share on Fridays, those are based upon those type of products that have a grouping of stocks, okay, like domestic, international, and so on, okay? I can't show those here, but I can show those on Friday. So hopefully that answers that question. Now, quick thing I just want to say in terms of sectors, okay? Trying to answer some questions along the way. So when we take a look at, now let me ask you this question, okay? Speaking of sectors, what sectors stood out today to you? I'm going to tell you this is important. And when we talk about kind of markets, you're always looking at sectors to really kind of get a gauge where those crossovers, bounces, breakouts might be happening. Sectors are the easiest way to kind of see where that might be happening. Now, if I pulled up just real quick a list, okay, for just a second, and I went to, let's say, that sector list right there. And if I looked at this and kind of said, okay, what do we got before we look at our first example, talking about moving average crossovers? Now, if I looked at this list and said, okay, what sector? Now, if you said, what is your favorite type of trend, 1 through 5? Many investors actually might say, James, my favorite type of trend is a trend 3. What is a trend 3? Price above both moving averages, not up near resistance, okay? And if we said, which ones are that? And we would say everything but healthcare and discretionaries. Everything else is that green color. Now, doesn't mean it's going to be that way tomorrow. Well, that's where it is right now. Now, if we also said, for example, where do we see that relative strength? Maybe in a 5 to 10 day period. Well, that relative strength, so RS, short for relative strength, 5 days, 1 week. Relative strength, 10 days, 2 weeks. We see a little push in energy, okay? IXT is not transports, that's technology. That shouldn't be surprising if the NASDAQ went up. What's IXR? That is right. It is Staples. And the one thing we got to take away from Staples is doink, that was a brand new short-term high. The 20DH stands for days high. That's actually telling us in the short term about a 1 month high, really on Staples here today. Now, you're also going to see if you want that breakout script, which is really right there. Today, the breakout, okay? And what you're going to now notice is, what does this say? It's a continuing breakout on the SPX. The SPX, as we saw on the chart, really you got a 20-day high, and it's also a 55-day high. Well, no kidding, because it's an all-time high. Okay, so it doesn't matter how you classify it. Now, the one thing we're going to also take away from this is utilities is also up there, and you're going to see that also, let's say the financials are pretty strong. Now, this column right here, hold, okay, hold. Trade above the high of the low day, close above the high of the low day. And what you're really going to notice is here, there's a lot of bounces here. If we kind of said, are there more bounces or breakouts? Well, hold would be bounces. 20 and 55-day high, those would be breakouts. And of course, obviously, that's linked to the breakout here. So if we say, are there more bounces or breakouts? There's more bounces, okay? Now, let's bring up that sector for just a moment, and let's go to work. Let's look at financials for just a second. So when we take a look at this financial sector, remember, I want to kind of really hammer down on crossovers, okay? Now, if we look at the financial sector, what you're now going to notice is a crossover. Now, I'm going to tell you right now, and I'm a person too, you could be taught a certain methodology, but it doesn't necessarily mean you apply it. Has anyone else ever had that happen where you're like, yeah, I know about that and haven't done it and I don't do it, right? Now, what we're trying to do is time the entries maybe as good as possible, okay? It doesn't matter if we buy the stock at $1 or $100 or $1,000. Every one of those entries has risk, okay? Every one of them. Now, if we're talking about the timing and we say, look, the timing for our example is really going to be that did we get a crossover? Now, this chart, let me share this with you, and I will also post this in, okay? Also post this in the description if you're watching this recorded, okay? So that link that I just sent you is this chart. So you can go up to the very tip top, go to setup, open shared item, and what you're going to now see is we can just copy and paste that in. So go to setup at the top right, open shared item, just copy and paste in what I sent or what you see in the description, okay? And it will say the scripts that was used in this class was this. Look in the description of the video, okay? Now, if you look at the financials, what would be some of the stocks in the financials? If the financial sector is doing that, now remember, I want to make this as, we don't need to make this complicated, okay? Let's use all the same tools, all at the same moment. Well, what I'm going to do is I'm going to go to the Market Watch and I'm going to go to Visualize. And we can all do that together, okay? So let's do it. Market Watch, Visualize, and let's just go to the S&P 100. Why 100? Why not 500? Well, because we're trying to make it more simpler, okay? We could look at the 500, just going to be a bigger list. Let's start with the 100, for example. Now, if we said, well, we're looking for stocks that are in the financial space and wondering, could I have a watch list? Well, we got information technology, communication services, there's financials. Now, I'm not going to say that if you look at financials, they had an unbelievable day, okay? If we kind of set up this list, okay, Visa, MasterCard, JP Morgan, Morgan Stanley, Goldman Sachs, BlackRock, you name it, Capital One Financial, and so on, you're now going to notice that this becomes our list. Now, what I'm going to do is I'm going to choose a stock that's really been one of the stronger candidates so far. Not the only one, but let's kind of start with COF. Now, how long did that take to do that? Now, by the way, I just want to kind of make sure if you have an iPad and you've downloaded the Thinkorswim app, you can pull up the heat map right on your iPad, okay? And I believe you can even do it on your phone. So you don't have to be sitting on a computer to actually see this, okay? I know for sure you can do it with an iPad. Now, what I'm going to do is I'm going to pull up COF. And what I want to do is when we look at COF, we're talking about a crossover, okay? And I want to kind of go back to the comments we made yesterday about volume, okay? Why did you talk about volume, James? Because you normally don't talk about volume. That's true. But lately, we've kind of been seeing some increased volume, okay? So if we look up at the chart, kind of draw a line, horizontal resistance, about at 190. We ran to the upside. Lisa yesterday talked about many stocks look like they're flags. And if we kind of look and kind of said, do we see something similar? We probably see that there's the little run up. This is the flag. This is the pull, okay? P. And then what you're going to notice is on the right-hand side, drooping down a little bit, there's your F. There's your flag. Well, what you're going to notice is today we actually saw the price go above the upper resistance line and the moving average crossed over. Now, a lot of people like to say, I like to see a breakout and a crossover, and I like to even see something where there's a little volume, that there wasn't just ho-hum interest, that investors were buying quickly and in high volume to confirm the breakout. Now, what I want to do in this case is, so let's kind of go back. Now, if you said to me, well, how would I be able to see a crossover? Do we have anything that could help us see the crossover? Anything? Let's go back to Market Watch for just a second. Let's go back to quotes, okay? So the column heading that we actually label as MAX, moving average crossover. So if we said, hey, James, I'm looking for a crossover, well, you're going to see that it takes the list that we have, and it says, are there any ones that are crossing over? So if you said, well, this is nice, but I don't know how to do it, well, we could make a list, and then what we could do is I could share this MAX, which is also my X as well, and I don't want you to think that I have some special hot sauce of how to find them. I'm using the same ones that I share with you, okay, because I'm a sharing person. So at the you're going to see in the chat, which I'll post this in the recording as well, we're going to go to the very top right, set up, open shared item, and we're just going to copy that in, okay? Now, what I'm going to do is when I do this, I'm going to just make a list if you don't mind, okay? Now, what I'm going to do is I'm going to just make a new list, okay? Create a watch list. Let's just call this class, okay? And I'm going to put in this first stock, COF. And I'm going to put in another one here. Let's call it just MS, okay? We're going to add some. And I'm just going to say save. Now, what we notice with that script now is we get a green background, okay? What is the green background telling us? Now, scripts, good reminder, the script is not guaranteed for accuracy or timing. So we want to have an understanding of what it is looking for. And then when we look at it, we want to confirm that, okay? So when we say the green background, it's just saying it's crossing over today. Now, if the crossover happened a day ago, 2 days ago, 3 days ago, it would just be labeled as X plus 1, X plus 2, X plus 3, and so on. It would be a red color if the shorter term moving average crossed down. Okay, now what I'm going to do is I'm going to go back to COF for just a moment. Let's take a look at this. Now, a lot of times when people see a candle that really looks huge, they're thinking, oh, there's no way, we missed it. Well, you got to remember something. When we talk about kind of the strategy here, many technicians would just take the midpoint of this green candle, okay, and do a buy limit order. Or they might say, James, I'm expecting some retracement, a little bit. And they might set it maybe a quarter of the way down of the body of the candle. Why the body? Well, it's because it's James Body to Body Boyd, okay? We don't do wicks. Wicks are extreme. We're looking to see where we had more touches, okay? More data. Now, if you take a look at this, we're going to put a buy limit order. Buy limit order just says buy the stock if it goes to that price or less. We're going to right click. We're going to go down to buy custom. with stop. Now, wait, but that doesn't have a target. So if you said, well, James, I want to put a target, this is trading growth and value. This is not buy and mold. This is buy and sell. Okay, now we're going to go buy custom with OCO bracket. So when we're talking about trading, a lot of times we're going to have a target order and a stop order. So let's stop for just a second. Two key tools that we talked about just to try to make life a little simpler, okay? So number one is when we're talking about, let's say, crossovers, that we need the MAX, okay? That crossover, so if I went to, let's say, a list of Dow stocks, okay, and I went to this drop down on the market watch, hit the drop down, go to public, and I go to Dow Jones Industrial Average. This is going to take the Dow Jones Industrial Average and tell me, are there any stocks in the Dow that are actually getting crossovers? As mentioned before, the green would be a bullish crossover, the 10 above the 20 period moving average. The red is the 10 below the 20 period moving average, okay? And the plus X plus 1 crossed over 1 day ago, crossed over 2 days ago, and so on, okay? Now, let's kind of just go real quick to also the fundamentals on this, since we kind of want to see where this company stands, okay? So now, by the way, if you were to ask most investors, now, let me kind of throw something out here. If you kind of think about it, we just had the S&P hit all-time highs again. If you were to ask people who are not in the stock market or who are underinvested, why aren't you invested in the stock market? A lot of times people say, I'm not comfortable, maybe with, I don't know what stocks to consider. Well, when we talk about these stocks to consider, we're talking about some of the fundamentals and technicals. When we talk about technicals, we're taught one of the most foundational concepts is a moving average crossover, which is found in the sample plan. The second foundational concept is a bounce setup, known as to hold, trade above the high of the low day, or call hold, close above the high of the low day. And the third would really be more of a breakout type setup. Those are really the three main types of really just basic crossovers, bounce, and breakout. Okay, class over. We can just close now. Thanks for coming. Now, but the biggest thing is it doesn't matter if you're in beginner, you're intermediate to advanced. That does not change, okay, which is kind of nice. You'd be like, oh my gosh, so if I understood those three, I'm just going to use the same things over and over again and practice those and hone that skill? Yes, okay? Now, let's kind of take a look at this. So when we talk about the COF, we just really kind of want to have a sense of really what we're investing in. So number one, it does pay some dividends, which is not a bad sign. The company wouldn't pay some dividends if they weren't pretty confident that the earnings of the business most likely are probably going to continue. We know that dividends are not guaranteed forever. They could raise them, they could keep them the same, they could cut them. But it's at least a decent sign that they pay some. Now, if you go down to the expected earnings, you're going to see that there can be some cyclicality of the business. We know that spending can sometimes be based upon what type of the year it is. Okay, Christmas time, summertime, and so on. This is the upcoming earnings forecast, historical earnings. Now, remember, a lot of investors really like to see when the business just outperforms what was expected, okay? Now, you're going to see that there was one time where they beat by quite a bit. And you're going to see another time where they beat also by quite a bit as well. Why is that important? You don't want the company to manage earnings, okay? I could get into that. But you like to kind of see if the company did really well, you like to see where they beat the estimate by quite a bit and they said they did, okay? Now, also when you take a look at this, related to what is in the sample plan, the price to earnings, the price to the earnings per share, that number is only showing a 17.5. Let's go back to the plan for just a second, okay? So one of the things that actually talks about when we talk about a fundamental value, okay, it's really looking for a PE of 20 or lower, which means the investor is paying $20 or less, in this case 17, for each $1 of the company's annual earnings. Not revenue, their earnings, okay? Now, what you're also now going to see, which is a comment that we brought up last week, is looking at ROE, return on equity. It means, so if we had an ROE of 10%, It means that for every $1 the shareholder invests, the company generates 10 cents or higher in profit. Okay, so the company invests the money, and from the money that they invested, they generate 10 cents or higher in profit. It's kind of important. That's a measure of return, a measure of the investment. Okay, now let's go back to this for just a second and bring this up. As we scroll down a little bit, something that I think is really important is you're looking really at its peers. Okay, so sometimes looking at peer groups, and I'm going to show you two different places where you can see peer groups, gives us COF, DFS, okay, and some of these others. Some of these others don't really look like number 1 and 2. I'll show you where you can find some differences. But when we look at the bottom, the reason why we like to look at the peers is when you look at, let's say, the growth going forward, that is a forecast, not actual, okay? Their forecast to grow 15%. Net profit margin, 12%. But this one right here that we're going to take a look at is at 25%. So why do investors invest? Well, they're trying to actually buy some businesses that are growing. Now, what's the con about this? You could forecast all you want, but it doesn't mean you're going to hit it. You could be above it, you could be at it, you could be below it. And if they miss the expectation, the stock might do really poor. Okay, so investors are really chasing what might happen, but they don't know it's going to happen. Okay, so they're trying to ride the trend. Okay, now what I'm going to do is when we actually come back to this. Now, by the way, when you look at the PE of COF or you look at the PE of DFS, it's only 11. So that's why we can't just blindly say that everything in the market is overvalued. You can't say that because many industry groups and or stocks, that is not the case here. Okay. Now, if we take a look at this, what I'm going to do is also go back to this. We're going to pull it back up. Let's bring up DFS. Let's go right back to the paper money account. Now, if you really said, what is the goal of the teaching? Well, the teaching is to really, the main focal point is we're building two portfolios. You can track how the portfolios are doing, and we're going to compare them to the benchmark of the S&P over time. Now, what we're going to do is we're going to go to the chart. We can do this also here as well. Right click on the chart. And actually, let's kind of put those lines back on. Those lines were right there and probably about right there. I'm going to right click, okay, about right at 201.81, and I'm going to go buy custom with OCO bracket. Now, you might be thinking, well, that's earnings. That's not earnings. That's the dividend, okay? Now, wherever we right click on the chart, that is where the order is pulled up at the bottom, 201.81. Now, what I'm going to do is when we talk about the stop, okay, and this is where I want you to kind of refine your plan. When we go back and actually look at that, there we go, pull it back up. When we actually talk about this, it talks about the sample exit. It talks about 3% below recent significant support level. Who came up with the 3%? It really goes back to back testing, okay? First of all, if you said, I'm going to use a moving average as support and set a stop less 3%, you could back test that. You could, for example, say, I'm going to set a stop below a moving average, assuming it's support, and do 1% or 2% or 3%. It really comes back to back testing. If you only use 1%, you're probably going to get wicked out a lot. The reason why people use a moving average is it can act like a support. And the reason why they try to give it 3% is to give it a little cushion to see if it can bounce. Okay? No, there's been some questions on that. So what I'm going to do is I'm going to go back to where the moving averages are. Now, if the moving averages had acted like resistance, we're going to kind of think, well, maybe those could act like potential support. We don't know that because it hasn't pulled back and bounced yet. But what we're going to do is we're going to put our cursor right on the moving averages, which are overlapping. 193, okay, 91. That's right where the moving averages are. Now, you might say, well, James, what's on the sample plan says 3%. Well, I'm going to tell you in our example, we're going to do 2%, okay? Now, we use 2% on stocks over $50. The stock is lower than $50, we'll use 3% in our example. A stop is a trigger to sell. Doesn't say it's going to sell exactly at that price. It's a trigger to sell. Now, what we're going to do is take that 190.03, type it in, 190.03, okay? Stop date GTC, there it is. Now, when we also go back to, let's say, the position sizing, we've been using an example of about $6,500 worth of stock. And if I said about how many shares would that be, the answer is it's going to be about 32 shares of stock. Now, when we saw SMCI go up here today, almost 20%, the investor, probably said, I wish they didn't know what position sizing was. But that's not probably the proper way to look at it. I mean, in reality. Now, if you look at this, 32 shares of stock, $200. What we need now is the target, okay? Now, if we go back to this, what you're now going to see is on DFS, what is the target? Now, if we're talking about that maybe that growth might continue, we might take this pull that we had, okay? And this is where the investor is using not only fundamentals, but technicals as well. And if you look at this pull, that upside move from here to here was about $34, okay? Now, if you took $34, and I'm going to take it from the wicks, why are you taking it from the wicks now? You're changing your mind. Well, if you take it from the wicks, it's going to make a lower price projection. So you could actually say that by taking the wicks in terms of the measurement, you're actually being more conservative, okay? So what you're now going to see is we're going to put a target right at about $218. And I'm going to put it right here, $218, okay? Dated GTC. Now, are there any questions on this? So when we looked at the sectors, we saw the financial sector getting a crossover. One of the stronger stocks in that space was Discover. But what you actually also notice on this is COF as well, which we'll take a look at, okay? So what I'm going to go ahead and do is let's go ahead and send the order, okay? Now, 32 shares of stock, okay? And that's a limit. Problem is that's a day order. We're going to change that day order because we don't know if it's going to go down to that price tomorrow. We don't know that. We're just saying come back down a little bit, okay? 201.81 or lower, got a target price, and then got the stop. We talked about how that stop works. We're going to go to confirm and send, and there you see that order right there. Now, I'm going to go ahead and send it. Now, when we go back to that COF, what you're going to see in this case, we pull it right back up, that chart. By the way, I think we kind of got cross-tracked a little bit between, those charts look so like each other, okay? I think it's the same idea. They look almost identical. This is DFS, okay? There's the order on the chart, and there's COF. Now, they look very, very similar, okay? Now, in this one, now you might say, well, James, this is nuts. You already did DFS. If the investor said, well, I don't know which one is going to go up, I might kind of, for example, now, by the way, if you looked at DFS, did it also have volume as well? It sure did. Doink. That was pretty high yesterday, and it was actually above the average. And by the way, I should say average on this chart, the 30-day average volume, okay? If we actually looked at COF and we said, well, there's that volume we were looking at here. So these are the two stocks we want to look at first. Now, same idea on this one, okay? COF. We're going to take this and kind of mark this about a quarter of the way down. This is about a half of the way down. It doesn't matter because we're going to look at them both, okay? Now, what I'm going to do is I'm going to right-click on that chart. Same idea. Buy limit order. Okay, buy custom with OCO bracket, same type of bull flag pattern. And now what you're going to notice is we have a buy limit. We don't know if it's going to go down to that price. We're going to do GTC, okay? So we're saying, look, if the stock goes down to 207.82 or lower, try to buy the dip, okay? And by the way, just because the stock goes down $2 doesn't mean it's in a bearish trend. So sometimes you kind of like to see the stock down a little bit to try to get a little bit closer to the support. Now, number two, we're going to take the same idea that we actually talked about on DFS, And we're going to say, look, the moving average might act like a support area. Where is it? $200.22, less 2%. And if we did that, it's going to give us 196.21. Okay, now here's the deal. Some people say, I know all about moving averages. And I would say back to the person, show me the last 10 that you did in the last month. Well, I did it like 6 months ago. Why haven't you done it recently? So the bottom line, it doesn't matter what someone's heard about. It's like, it's what are they practicing? So we're trying to time. Now, if someone said, well, I can't find these moving averages, I gave you the blasted script. I want to say one thing about that as well, okay? So 196.21, dated GTC, okay? Dated GTC. Now, when we come to the capital size, okay, if we could normally put in 6,500, it's going to still be about 31 shares. So I'm just going to take and just type in plus 31. There it is. Now, when we come back to the target for just a second, it's similar than DFS. Now, what you're now going to notice is, if we kind of say, where's that top? It's about $31. If I take, let's say, that's the pull. If I take the lowest point, and I'm using wick. Now, by the way, if you use body on this, it's going to give you a higher target, okay? So if I actually said, well, 30 bucks, taking from the lowest intraday low, that's going to give us a price target of 222 and change. We're going to type in 222, okay? Now, you might type in 222 and a half. We'll type in 222, got to stop. So remember, if you take the lowest point, using the wicks, you're going to have a lower price target. If you take bodies, it's going to give you a higher price target. So what the investor is trying to really do here is they're trying to say, I want to be a little bit more conservative. Now, I want to go back to something just real quick and wrapping it up here. I want to give you a homework assignment and recap what we did. When you go back to this, when you right-click on MAX, okay, you can edit the formula. And the one thing I want you to kind of notice is here, is if you said, hey, James, I don't want maybe the 10-period move, or I want the 10-period moving average, but I don't really want the 20. Well, anywhere you see 20, you could take 20 out and you could put the 30-day moving average. You could take the 20 out and just type in the 30-day moving average. Take the 20 out, type in the 30-day moving average. Take the 20 out, type in the 30-day moving average, and so on. Anywhere you see 20, if you said, hey, I want the 10-30 crossover, that's how you could do it, okay? So we'll keep the 10, but anywhere where it says 20, if you said, I want 30, well, just type in a 3 instead of a 2. Simple way to change it. Now, the last thing I want to do as far as a homework assignment, I want you to, number one, go back to this sample plan. And I want you to print this out, and I want you to imagine that next week, you're going to go over how you find stocks, okay? And we're going to kind of tackle bits of this over the next couple of weeks. Today, I want to kind of start off with this sample entry section and focus on crossovers. Now, the examples that we pulled up, they were kind of more, really, in essence, they were really more along the lines of more value trades that actually had lower price multiples. We're going to get into more into that. Now, what I also want to do as far as your homework assignment, I want you to go out and start using that MAX script as far as trying to find examples of crossovers. And I want you to practice trade those crossovers, okay? Now, I'm out of my time here today. It's funny how the time can go by so fast, okay? Now, also remember that with what we so I gave you a homework assignment. We're going to continue to chisel away on that sample plan and try to, really effectively trade that sample plan. So the goal over the next couple of weeks is to make sure you're comfortable with it, okay? Now, I'm out of my time. Remember, with what we discussed, it was done for example, illustrative purposes only. Remember that all investing involves risk. Go out and do your homework. We'll see you back tomorrow morning at 9:30 a.m. Eastern. Make sure you subscribe to the Trader Talks channel. This has been the class on trading growth and value stocks. Thank you, Connie, and thanks to all of you. Have a great afternoon, and we'll see you back tomorrow morning. Take care. Bye-bye.